back home for Q2 of FY23, and that is estimated to also slow down to around 6.4% versus 13.5% in the previous quarter. We have, it will be announced at 5:30 p.m. this evening. We have Lata joining in with more details on what we can expect from this figure.
Yes, 6.4 is our poll, and that 13.5 was an understated number. Last quarter, actually, people were expecting 16 and 17%. Even RBI was expecting 16%. So because of that lower number, a little bit of overflow is expected in the second quarter. 6.4 would be a very good number compared to 8.4 a year ago. You shouldn't take it as a lower number because all these are coming off of weak basis for the past 2 years. Let me just give you the amount. The amount of GDP that people are looking out for is 38.05 trillion. And if we do hit that number, we would be 3.2% above the size of the economy in the first quarter, which will be very good. You know, second quarter is a monsoon-drenched quarter. And if you're able to grow 3.2%, that will be very good. Within that, agriculture. Agriculture is expected to grow reasonably well, a good contributor, 3.2%, steady as she goes, like last year and the year before. Manufacturing will be the lead down. Our poll gave a 0.7%. Several people have come with negative. You know, the range has many minuses and a plus 2% or thereabouts. So it's going to be a tragic performance from manufacturing. And one can understand there were a lot of, coal shortages, fuel shortages, chip shortages, all kinds of things that impacted manufacturing. Services will be the super performer. The big items, trade, hotels, transport, broadcasting, financial services, real estate, all these are big ones. All of them expected to do 8.5 to 8.6% over last year's already decent performance, and public administration. You must remember that these did extremely badly 2 years ago. So even last year was only a minor improvement over, pre-COVID levels. With all this 8%, we will just about come to pre-COVID levels. Private consumption is the one people will watch out for. If it clicks 12%, it's very good. It's expected to. After all, we saw very good auto sales. The government consumption also expected to be decent, 9.5%. And gross fixed capital formation, 20%. Don't let it take your breath away. All these are coming off very, very low basis in the 2020 period. Not much of it was made up last year. So we'll have to wait and see. If we do clock 38.05 trillion, we are in a good spot.
All right, we'll be awaiting these numbers at